Is quant, meaning algorithmic trading, the future of investing? Should I be worried about it? I don't think so. I don't think so. I don't think algorithmic trading is the right way to invest at all. I don't think that trading makes sense to as an investment philosophy either. And please keep in mind that the markets did extraordinarily well over the past year, and this is not a normalized economic environment or stock market, I should say. And so please don't trade, please. It's like going to a casino. I want you to be a long-term investor, okay? And I want you to, whenever you invest, I want you to ask yourself one question. If the stock market were to be closed for 10 years, would I be comfortable holding this investment still? That's what Warren Buffett says. And obviously we know the market will never be closed for 10 years. But I want you to be longer-term focused. Because as Buffett said, the longer the view, the wiser the intention. And he's dead right. If you think about it, every month has 20 weekdays, and that means 20 days the markets are open. And trying to make money every month by trading is really, really difficult. You'll get fooled by randomness because stocks go up and down based on factors out of our control. The stock that you own might go up or down a lot because of a healthcare related news release. Or the stock might go up or down a lot based on a similar stock in the sector that releases positive or negative news. It's just too hard to make money in the short run. You'll get fooled by randomness. The worst thing that can happen is that you start trading and you make money right away. And I say it's the worst thing because it's like going to a casino. Worst thing that can happen is you go to a casino for the first time and you make a lot of money. The odds are against us. You just got to be very, very long-term focused. And from a tax perspective, it's better to be long-term focused as well. And let me explain what this means. So in most countries, governments reward us for being long-term investors. What that means is if you make money on a stock in most countries, within 1 year, you pay higher taxes. But if you make money in more than a year, and then you sell that stock or whatever profit in more than a year, you pay lower capital gains taxes. Governments are trying to reward us for being long-term focused. Yeah, so just be very, very careful, please. Yeah. Now, when it comes to the future of investing in machines replacing humans, what we've seen is correlations have gone up a lot, right? So stocks are much more correlated. They move together much more so now than in the past. And one of the reasons is, yes, there is some computer algorithmic trading going on, but also it's because a lot of people are buying just a ton more ETFs or exchange traded funds, right? And so they're pouring more money into index funds or ETF funds, which makes the whole market move up and down together much more so from a correlation perspective instead of just buying individual stocks. Yeah.